real quick. Boom, and we're good. Which one again? You said Microsoft?
Microsoft, yes.
Sure. All right. So, Microsoft's earnings, believe it or not, were really positive. We beat on everything. EPS was positive, revenue was green. The only reason I think we saw a little bit of a dip off that earnings was because we had kind of gotten ahead of ourselves with anticipation, right? The hype in the tech sector as a whole has been extremely high recently, and pretty much everything was just a blind buy, right? So we pretty much, despite beating expectations, we were expecting a lot more, and we didn't get it. Um, as for Microsoft here, we are up after hours thanks to Amazon and Meta. So long as let me give you a more clean picture here because this is what I'm going to be referencing when I give you technical levels. So what I like to do is kind of turn off that noise. So I turn off after hours and we get this, right? So when I throw volume profile on, we can see where kind of this big area is, right? You can see over the last couple weeks, this 402 area has been the spot of defense. And this is why we were playing shorts on it yesterday, right? It ended up paying out after FOMC, but leading into FOMC was giving us a whole lot of nothing. But the play ended up working out and we filled the lower price gap and everything. But coming into today, right? Big move off the rebound from the general market, and we continue to defend that 402 area. Coming into tomorrow, assuming that we hold this gap up, so long as we can clear this pivot high, I I I have a hard time believing tomorrow's not going to be another nice green day, right? You've got four or five of the biggest names in the market all pretty much on fire right now, right? Like every dip, every small red day is a buy the dip. It's a discount to traders. Um, of course, the euphoria will run out eventually, but for now, the sector is hot. Everything tech is just getting unlimited bid. So again, I think Microsoft is pretty good, especially considering we've done a great job defending this 402 area where our volume taper is. Um, I think it looks solid, man. Again, it'd be pretty hard to be wrong on these names just because I honestly feel like if you're day trading it, that's where most of the risk is. If you want to grab swings for next week, I feel like that's a much more confident play, especially here. Because in my mind, if you break back under this 402 area, you're wrong, right? And that would confirm a greater reversal to the downside. Whereas so long as we're above this, we should be able to continue up and test this previous pivot high. Um, I think in this sector right now, just riding the trend is your best bet, right? You can definitely consider this pivot as a discount, and in terms of maybe a week or two, I think you'll easily be able to capture higher prices on this. Is there something specific you were looking to do?
Maybe it's time pause for March 1st expiration, so just wanted to see how to manage that.
Yeah, I mean, shoot, if you had grabbed a little bit closer dated, March 1st is great. That's literally what I was just saying is with time, you should be able to ride this comfortably. Um, you're gonna be up tomorrow. You're gonna be up nice, right? This thing's already up at 407 after hours, so you already caught a good decent move here. Um, and like I'm saying, I think the tech sector, again, there's no sign of any slowing down at the moment. You know, we've still got Nvidia waiting to report, and so long as that earnings report is not out yet, there's still going to be hype and anticipation in that sector. So I think you're sitting fine. As for targets, I'd really just we're at all-time highs. So there's nothing really confident here for a target. I can't give you a specific level and be like, oh, this is where sellers are going to step in. I don't know. I don't know where sellers are going to step in. You're just going to have to monitor the daily time frames and see if we start to stall out anywhere, right? But I think you're fine. I think tomorrow you should be able to get a trim on it and hopefully let it ride into next week.
Awesome, thank you.
Hell yeah, man. Mm. Hambo bands. How's your night going, man?
Hello.
How's it going?
Good, good. How about you?
I'm doing good. Honestly, kind of having a not so great week trading wise myself, but It's Thursday. Tomorrow's Friday, like I said. Weekend starts tomorrow, so
Right.
trying to fix that mindset. You got anything you want to check out, man?
I was trying to log on.
You're totally good, man. We've got plenty of time here, no rush. 3x Pain said I have some next month 475 longs on Microsoft also, just managing position. Yeah, 475's pretty far away. I would definitely okay. Um, next month is good, but 3x Pain, I feel like you chose those contracts because they're cheap. Am I right? No, it was anticipation for earnings. Okay. All right. So in that case, I'm guessing you're red on the position. Is that right? Yeah. Okay. So you definitely sat through a bit of an IV crush. Um, okay. If we do end up seeing a push into these pivot highs, I would, if they're green, of course, if your contracts are green, it doesn't matter how much, whether you're up only 5%, 10%, 20%, it doesn't matter. If we get into these pivot highs around 415 to 520, I want you to close that position. Again, I can't tell the future. Who knows? There could be some miracle that sends this trend higher really, really fast. But 475 is a very, very bold price target. And yes, I know with options, you don't need to necessarily get in the money to be profitable, but because you're so far out of the money, those contracts are going to take theta decay really, really fast. Especially if we don't end up seeing this trend continue. Say we stall out. We don't even have to go down, but say we stall out for a little bit, those contracts are going to start losing value fast. So if you can get those contracts green again in the next couple days, it's probably in your best interest to lock it in, okay?
Like, do you potentially play that tomorrow?
Well, you just day trade it, honestly. So let's take a look at the structure. The first thing I would suggest, right? It's already kind of forming some sort of balance here. Again, this is probably not going to be the balance that is respected overnight. But let's take a look at something that reported recently, like SMCI. You remember that earnings? So, is this the best example?
Probably not, because
Yeah.
some good money on it, but it dropped like
Yeah. SMCI is probably not the best example. Who did really well off of earnings that we can look at recently? Um, let's see. Do you have any suggestions? We can do any name. I'm just trying to think of something that was playable. Let me look at the earnings calendar real fast. So, who reported earlier this week? We had Google, AMD, Microsoft. I think Microsoft honestly could be a decent example. No, it's not. This thing was all over the place after earnings. How was AMD? AMD dropped. Okay. Well, anyways, all I was gonna say is you can typically use the structure created both immediately after the earnings and in the pre-market to form some trade ideas, right? So, AMD, this is a funky one, but just to use as a quick example, right? So immediately following the earnings, right, we dipped hard into this, 160 area. So for one, that's a psych level. There's going to be sitting orders there. Um, but we started to base it, so for one, we gapped up. If we were looking to sell off, or take some profits after the open, 160 would be a decent area where you'd be willing to risk longs. um as for reversal effort, this is a little bit of a wonky follow through to earnings because this was very much dependent on what was happening that day, right? This was the FOMC day. I believe it also had some correlation to the Microsoft earnings. There's a lot going on with this chart. It's definitely not the best example, but what I can say as for playing a name like Meta for tomorrow, clearly sentiment's going to be positive. The only question is, did they get ahead of themselves off this earnings? In my mind, absolutely not. For one, they killed it this quarter. Their earnings or their EPS is up 200% year over year. This is the biggest revenue quarter they've ever had. And on top of that, they announced a $50 billion buyback program and they're paying their first ever dividend. There are going to be people who have never owned Meta in their life doing everything in their power to get their hands on some equity tomorrow. Okay. And that's assuming, let's say it sells off back into 420 or 430. There's still going to be a lot of people looking to buy Meta simply for the fact that now A, it's paying a dividend, and B, they believe in the sentiment that will be driven from the buyback program. Now, granted, there's still a little bit of time. It's not like they're going to start immediately buying equity tomorrow, but um, there was nothing but positives in this earnings. It has every right to be up 15, however much percent it's up after hours. This earnings was incredible. This is probably the best earnings we'll see all year in terms of, what the company produces and what they announce. Like a $50 billion buyback and the introduction of a dividend, simply adding a dividend adds so much intrinsic value to a company, right? Because it's paying you and it's giving you an income for simply holding rather than just depending on capital gains. So for that reason alone, they could have lost money, right? To tell you guys how big of a deal it is that they're introducing a dividend, they could have lost money, they could have made less revenue, missed on expectations, have no stock buyback program, but introducing that dividend would have sent them higher. I guarantee it, right? There are every single stock valuation model that exists, free cash flow, dividend discount model, um, they all rely on the company having some sort of dividend. It doesn't matter how big or small, but simply having a dividend adds a time value to your stock. Okay. So that's a huge deal. Like I said, there are going to be people who have been wanting to buy Meta and wanted an excuse to buy it. This is it. So again, the sentiment's going to be positive. If it falls tomorrow off of some reason, it's not going to give up the entire earnings move. It's still going to close tomorrow green from where it closed today. It may just be because they got ahead of themselves, and there may be some people who are looking to take some profit and take some trims. From a fundamental perspective, it has every right in the world to be higher. If anything, I would just wait for dips in the mornings. If it gives you nothing to work off of with the pre-market and if the action right now and in the morning doesn't give you any clean levels to play against or risk against, I would say honestly, just wait intraday. If it does happen to give a dip, just wait, try to find some sort of buy pressure or some sort of technical reason, like a nice bottom and maybe some wicks getting put on the underside that give you a technical reason to like it. But I would not be shorting this name tomorrow.
All right, thank you.
In fact, if I said I'm probably not going to be trading tomorrow, but I think this kind of gives me a reason to.
Thank you, Ryan. You're trading tomorrow?
It's just because I've had a difficult week. The last thing I want to do is I've been having some tricky reads. Like I said, we did really, really good all of January, and so naturally the winning streak was going to come to a humbling end. And that's kind of what's happening to me right now. I just haven't been able to get a clean read, and with SPX, when you take those losses, they hurt. So, I'm not really letting it affect me emotionally, but the last thing I want to do is just when I'm not in the right headspace, kind of either give back more money or go into the weekend with a sour taste in my mouth. So I will be here. I'll be in voice chat. I'll be helping out and I'll be hanging around if any of you guys have questions or anything like that. But there's a small chance that I'll actually send any alerts or take any trades. Does that make sense?
Yeah, makes sense. I
Yeah,
understand. I've decided to stay away from through the on SBS as well because
yeah, it's a high risk, high reward play style. And because I've been doing this so long and I understand my own personal risk management, it's a risk I'm willing to take, but it is not for everyone. But like I was saying, The best thing to do when you're kind of on tilt mode and not really doing well is not to increase risk or, try to increase your batting average. It's just to step away, right? Step away, refresh, and come back when conditions are a little bit better or volatility moves in your favor. Um, Definitely don't want to keep forcing trades if you are not in the right headset. So me personally, I'll be around. I'll be giving, commentary and helping out in voice chat, but I don't think I'll be looking to place many trades. But yeah, that's how we're feeling. Um, Vince Net, I'm not sure I pronounced that right. How's your night going?
Hey, what's going
Hey, how you doing? Beautiful.
on? Right.
Uh, Amazon's up nice just because they had a massive beat on EPS. The CEO actually came out and said faster delivering times are driving faster turnover in reorders. So business is picking up in terms of just volume, how many orders they're shipping. So that's always positive. But Meta, like we just covered, um, there are so many reasons why they're up as large as they are, right? Like I just said, just to quickly debrief it. Um, for one, their their EPS is up 200% year over year. They beat earnings. This is the biggest revenue quarter they've ever had, and the two big reasons, right, is the $50 billion stock buyback program assumes that $50 billion of liquidity is being injected into the stock over the next 3 months. And then on top of that, you've got the introduction of their first ever dividend, right? And I said this earlier, that's the biggest one by far. I mentioned that even if they had a bad quarter that missed expectations, and there was no buyback program, the stock would still be up off of the introduction of a dividend alone. Because every stock valuation model that you could possibly use on any company includes having a dividend. It adds so much intrinsic value to a stock, it's not even funny. It gives you a reason to hold when you're expecting no growth from a company, right? Why do you think about I gave this example to someone else earlier today. Think about a company like Procter and Gamble, right? They produce, toothpaste, soap, toilet paper, stuff like that. Stuff that people are gonna buy regardless, right? It's it's what we call inelastic. Okay. Um, there is Demand is not gonna shrink or grow. Their profits are going to remain stagnant and similar unless they raise prices. So there's no real growth in that industry. That makes sense, right? You're not expecting to make a capital gain on holding that stock. So why would anyone own Procter and Gamble? Because it pays a dividend. Because you're being paid to hold it, right? That's where people who buy Procter and Gamble are not buying it because they're expecting the stock to move 20% in a year. They're holding Procter and Gamble because it pays them regularly to do so, right? In terms of the dividend. So that's where that intrinsic value comes from. Now you add Meta, who is a growing company. They are actively increasing profits and revenue every single quarter or most quarters, right? The tech space is a growing sector. And then you add on top of that, there's also a guaranteed income with the dividend now. Holy shit. That's a major reason for so many people to hold it. And as I mentioned earlier, um there are people who have never traded or held Meta equity in their life before, even when it was Facebook, who are going to be logging on tomorrow and buying equity because it now pays a dividend. You'd be surprised how many retail investors around the world will not buy a stock unless it pays a dividend. So it's a huge thing. It's a huge thing, right? That's why I said they could have missed earnings. They could have missed earnings horribly. There could have been no buyback program, but if they announced that dividend, it was going to go up. And
Wow.
for a market leading name such as Meta, for them to be introducing their first ever dividend is huge. In fact, I'm almost surprised they're not up higher. So yeah, Meta is not a name I would be shorting tomorrow.
Yeah, good to know.
It might get a little dip off the open, but if anything, I'd be taking that as a discount to try and get in short term.
Good to know. Good to know for sure.
Yeah, of course, man. But yeah, there's a lot of good stuff tomorrow. I'm a little bit upset that volatility is going to probably die back down, but the market's hot right now, you guys. There are boundless opportunities. If anything, my style primarily revolves around trading indexes. For those of you that have been here a little bit, the two of you guys are trial members or haven't been there that long, may not know me and my style, but I primarily trade SPX. That is my bread and butter. I trade it day in and day out. It generically works. Rain or shine, high volume, low volume, it doesn't really matter. SPX provides plenty of moves that can yield some great percentages in short periods of time, right? That's what I focus on primarily. But in times of low volatility, it is definitely better to focus on individual names and individual sectors, right? And right now, that's exactly what we're seeing. The tech sector and the market leading names, they're hot. I would definitely shift focus if you haven't already. Play the names that are moving from earnings. Microsoft, Google, Amazon, now Meta. Apple didn't really look like it did much, but Nvidia's coming up into earnings. Everyone knows the chip sector is hot as hell right now. Those are the names you want to be playing right now because that's where the volume's at. That's what people are focused on at the moment. You need that volume to drive movement, and those are the guys that are moving. So, you know, I typically don't tend to play blue cap or blue chip options super often, but you know, that's where my focus is. Those are the names you want to be looking at for intraday moves. All right. So yeah, that's we got some good stuff covered there. Does anyone have anything else they want to check out? I'm surprised we're not getting some more people in here, especially after this meta earnings. I thought the turnout tonight would be a lot better. Shout out to you guys though for showing up.
For sure.
So I got into equities in 2015 and I started options in 2018. With options, I've got about coming up on 6 years of experience.
Wow, that's crazy. How old are you?
Coming up on 24.
Wow. Okay. Nice. Nice. That's dope. That's dope.
But how about you guys? You guys fairly newer? You guys been doing this for a year, 2 years? What's up?
Yeah. I mean, yeah. No. I mean, like, I was doing it back in like 2021 ish, and then like I kind of stopped, and then now I guess I'm just kind of getting back into it. I mean, my friend Cole, he's also on this. He's the one that told me about it actually.
Sweet.
So yeah, yeah, yeah. So I guess we're just kind of like been doing it together, but yeah. I mean, I guess just getting back into the groove of things, but if you want to learn more, you know,
I'm gonna take a wild guess and say you got in when GameStop was going off, huh?
but yeah,
Oh, that makes sense. That makes sense.
yeah,
Well,
yeah. Back into
hell yeah, man. Well, welcome to the group. I hope you enjoy it.
yeah,
We've been
yeah.
we have been doing this a long time. We opened our doors in June of 2020. So you're in a good community, man.
That's great. That's great. Glad to hear it.
Hambo, how about you, man? You're about to say something?
And I was just saying that I'm like fairly new to trader.
All right.
So
Hell yeah, man. Um, I would sorry, don't mean to interrupt. What were you saying?
yeah, I was in Rake's mastermind course, and then I just my thing ran out. So
Ooh, I love Rick to death. He's a good friend of mine. But I gotta ask, what did you think of that?
it was pretty good. I'm not gonna lie, it was pretty
It's pricey, huh?
good. But see how you game for like SPX and stuff. So I was interested in your trades too.
Hell yeah, man. Well, again, I don't want to steal you from everyone, especially Rake. That's my guy. We go back, but hell yeah, man. If you're looking to learn from someone else, I'm happy. I'm happy you chose to come over here. Um, yeah, he's been pretty hot recently. I know he's sick right now or something, but yeah, I know people have a more refined taste for risk, and if that's what you're looking for, I'm your guy. SPX is it's a lot of fun, but it's dangerous.
Very dangerous. I did trade it today.
It happens, man. It's happened. Trust me, dude. I think my favorite saying is everyone starts in the hole. I don't know anyone who starts trading options and is just immediately green. I mean, me personally, I probably blew, let's see, I think I blew 3 or 4 accounts and lost close to 10K before I started becoming profitable. I know some people who, lost close to 50K and turned it around. I know some people who are down 40K and are, like currently and are still trying to make it work. So everyone starts in the hole. It just depends on how much you want it in all honesty and how much you're willing to learn. I genuinely think anyone can trade. It's gonna take. I think if you like when people come up to me and ask like out of my friends that they want to get into trading, I say you have to be willing to kind of go through a lot of frustration and anger for about a year minimum. So it's tough to get into, and that's why I'd recommend, if you are just starting out, definitely look into paper trading, you know. Maybe start with a paper account, start with an amount that you would realistically use, set the account to maybe 5 or 3K or something, and just throw stuff around. Throw some paint at the wall and see what sticks. There's so many different strategies. There's no set right way to trade. Um, I trade SPX. I know other people who won't touch it. It doesn't mean that they're not profitable or I'm not or anything. It's just if you're making money, you're doing something right. And in trading, there are so many ways to make money. So it's good that you're searching out different ways to find strategies and what your groove is going to be. But just stick with it, man. You might blow an account or two. Trust me, everyone does. It's not unique. Doesn't mean you're bad. It's just it's we call it the market tuition, right? So, but anyways, you guys got anything you said again, man?
My main problem is mostly on my entries. Like I have bad entries every time I enter a trade.
Okay. We can cover that right now. I have something we can go over right now in terms of that. Okay. So check me out real quick. We're gonna go over risk to reward. Okay. Are you familiar with that?
A little bit, yeah.
Okay. So this is primarily. Oh shoot, that is not what I wanted to do. 12, 13, 2023. Okay. So what you see here, this is primarily what I base 90% of my trades on. This blue stuff is called volume profile. Are you guys familiar with volume profile?
Between the bottom and the ones.
That's a great question. So this is standard volume. This just shows volume by time. Okay. And in all honesty, it's pretty fucking useless. Okay. Volume by time tells you stuff you pretty much already know, right? Yesterday, volume was super high. Why? Because we had FOMC, right? We knew there was going to be volume. Um, the only thing you could maybe do in terms of like finding a trend is, something like this. You could go, okay, on this day we had um, dramatically lower volume than normal. On this day we had dramatically higher volume than normal. You can definitely work out trends here, right? Um, so like something like this, right? Look at these flat days. Something like this would say after a declining trend in volume, having this incline would show that you're more likely to see a continuation move, right? Um,
Mm.
but there's not much that volume by time is going to tell you, if I'm being 100% honest. Um, but volume profile All it does is reorganizes volume by price instead of by time. Okay. And what this does is it shows you where pools of liquidity are sitting and where fair value has been established. Okay. So right here, we spent a lot of time in this range, right? Between let's say 47.50 and 48.40, right? So it's about a 90-point range. It's a big range, but we spent a lot of time in here, so much to where a big value area was established, right? And you can see what happens. Price goes out of its way to find liquidity. It doesn't like being in low liquidity areas. So we got caught, and you can see, how does price act when we get outside of this volume, right? This is where sellers are most likely to be present. What happens when we get down to the bottom here, right? This is where buyers are most likely to be present, right? When you dip outside of this fair value range is where you're going to struggle. Okay. So you can see, once we left this fair value range, what happened? We made a big move, right? We saw a
Right.
big push higher, and we left a very large area of low liquidity. So a part where I took a decent sized loss today. We're going to cover that here at the end, but you can see we spent a good amount of time balancing here. We built a good chunk of volume, right? And then we made a quick push higher. We left a bit of a gap, and then we spent a lot of time in here, established fair value up here as well. I'm going to cut the time frame down, but I want you guys to keep this in mind. I'm going to highlight this area right here. So from about 74 down to that 40 area that we mentioned. Okay, so just keep this in mind. Keep this big volume gap in mind for now. Okay,
Okay.
but I'm going to cut this down to about 119.24. 119.24. Okay, cool. So now you can see very clearly, right, where value is. We've established value between 75 and this 30 area. Okay, so I'll mark this off. The first spot being up here at 30, and the second spot being down here at 75. Okay, so in this range, this is where you're going to find opportunities. Okay, so of course, risking against this 30 area has paid well. You could have shorted this 30 area 1, 2, 3 times, it would have worked, and you could have longed
Right.
this area 1, 2, 3 times, and it would have worked. Okay, so now you've got an established range here. It might not be super clean, and trust me, there's ranges within the bigger range here, right? You could have argued that this section right here was a range. You could have argued that this right here was a range, right? And with a
Right.
volume profile, that's the beauty of it. You can confine this to a time period that you want. So for example, if I wanted to, I could confine just this time space and it would give me a different reading, just like it has when I trimmed us down to this time frame. Okay. So risk to reward is what you're willing to obviously risk for any given unit of reward, right? So um, let's say you're just playing this range and you're using this fair value area. Okay. This right here is a great risk to reward entry, right? Because if you break down into this gap, you're basically expecting a 35-point decline back, or 40 to 75. Yeah, about 35 points into that lower gap. Do you remember this big range we just made? So
Right.
if we were to break back under this, we would be expecting price to outsearch liquidity, right? And because there is none here, if we failed and fell under this, we would be expecting price to head back down into this, all the way to the bottom, just as fast, if not faster than how we came up. Okay. So let's say you enter calls, you see this action and you think, okay, price has been constructive, we've been making higher lows, I think we're going to see a continuation move. Well, let's talk about risk reward now. You see this happen, right? And you're thinking, okay, we just broke the most recent pivot highs, um, we've seen a bunch of lower highs, I think that we're getting ready to see a continuation move. Okay, so you enter calls right when you break lower high, right? So you enter right about, I don't know, here or something. So what's your risk to reward, right? You don't know. Let's say you're targeting 49.50, okay? That'd be a big move, first of all, but let's say you're targeting 49.50 because this shelf isn't here yet. This at the time that you're looking at this is not here yet because we haven't made
Right.
this action yet that would put that shelf there. Okay?
Yeah.
So you're entering at 25, trying to catch 25-point move. Okay? But let's say you're wrong and you would have in this situation. Your stop loss, there's nothing wrong with the chart until there's something technical that tells you you're wrong. Okay? So, what would tell you you're wrong in this situation? If this broke down, right? Let's say this trend failed, right? This is what you would be using most likely. So you would be risking all this, okay? Because it ended up working, right? It ended up working. And it still held the same structural pattern that you were basing your theory off of in the first place, right? So you were willing to risk because you entered at the top of the range expecting a continuation. That is the worst risk reward entry you could have taken, right? So you were willing to risk 25 down to about 0. So you were risking 25 points to make 25 points. That is a 1-to-1 risk reward ratio. And honestly, that's pretty trash. It's pretty bad. You typically want at least 2-to-1. So let's talk about, a better risk reward entry. Let's say I'm going to use two examples here. Let's say this is your risk reward, right? Or this is where you want to enter because you're like, okay, I've got this trend drawn. It's gotten 1, 2, 3, 4, 5 taps, right? It's been respected, and general structure is still strong. We're still making higher lows. So you buy this, right?
Yeah.
You don't even need a breakout to be right. Let's say you're just targeting the pivot highs. So at this point, you're in and it's a small stop loss. If we break below that previous pivot, that's only, so you're risking 0.3 down to about 97. You're risking 6 points to make, what's that? 0.3 to 30 to make 27. 27 to 6. Oh, the mental math. That's close to a 5-to-1 risk reward trade. Okay?
Right.
You don't even need the breakout. It doesn't even need to give you the move that you wanted, right? You could have just been playing the range.
Yeah. No, exactly. Yeah.
So essentially,
Yeah.
where you enter matters. It very much matters, right?
Of course, yeah.
And so now let's talk about how I took my loss this morning. Right? So basically, I got ahead of myself. Here's what I saw. I saw that yesterday we had a negative catalyst. Powell came out and said, "Hey, don't get your hopes up for March. We're probably not going to cut rates." And we sold off, right? We got a pretty negative reaction for it. But sure enough, where did buyers step in? Right at this 75 area where buyers had been showing up continuously right at our volume taper. Okay, right where volume tapers off, that's where buyers showed up. And I saw action was pretty sluggish. We kept failing reversals. And this morning, even though we gapped up, I saw us see this massive sell off back in the low a day. I was like, okay, we've failed 2 reversal attempts now, and we're still dancing at the lows. I think that we're poised really, really well for, a breakdown. But I was taking the risk because I was like, okay, well, if we get this move, I'm catching 35 points. But here's the thing, I wouldn't. Yeah, yeah, yeah.
Sorry. So like, if sellers are having trouble breaking down that point, tell you that buyers are pretty strong as trouble breaking storyline.
Yes, yes. So you're 100% right. I would argue there are some instances where, okay, I've been watching price action for a long, long time. And sometimes when you see certain price action, it gives you an idea of what's about to happen. Okay. So in this instance, I was using both of them combined, right? And what I mean by that is price action, right? We had a negative catalyst. One, there's my fundamental reason. Two, the price action, we had failed two reversal or bounce attempts, right? Showing that buyers were not willing to trade these prices at the time. Okay. That's why I thought, okay, we have failed multiple bounce attempts. Buyers are not confident. Okay. If you look at a much smaller time frame, yes, you can see that buyers were fighting. If we 119.24. Okay. So if you look at a 5 minute, yeah, you can see buyers were fighting, right? Yeah, you can see once we wicked, right? They did not want to get under this 77 area, right? And we built a base and we rounded it, right? So on a much smaller time frame, you're 100% right. Let me go back. 119.
Wait, sorry, I something. Can you put in the aggregation period right there? Like, pick precisely like what, like after how many minutes you want it to. So like you can put at 31, 32, 33, and all that.
Yeah.
Or no.
Yeah.
Damn, that's pretty cool.
I can do a 32 minute, 30 minute.
Wow.
Yeah. Yeah. Watch this. I'll make it a 3 minute. Or that's 3 hour. Shoot. Let's make it a 4 minute. Fuck it. Wait. 4 minutes. Boom. This is a 4 minute chart.
Okay, that's cool. Because I just finance and like I can't put it that precise. Like I put out 1 5. That's pretty much it.
Yeah, Thinkorswim. If you want a sophisticated charting platform, Thinkorswim is your way to go.
What's it called? Thinker. Hold on, let me write this down.
Think or Swim by Charles Schwab. They used to be owned by TD Ameritrade, and they were honestly better. But yeah, I couldn't trade without Thinkorswim. It is by far my preferred charting platform any day of the week.
Okay, for sure.
But here's what I was saying. Oh shoot, let me fix this. Okay, so I was expecting us to break down, but I was entering at the one spot where buyers were going to be the most present, right? So the risk reward that I was taking, I was willing to risk. Here's the thing. I stopped out long before this, don't get me wrong. But there was nothing wrong with the chart until we broke over this 30 level, right? That's where we established the range. So I entered at the bottom of the range, expecting a breakdown, and because of that, my risk reward was extremely poor. Okay.
Right.
So I was risking, in theory, again, I didn't hold this entire thing. I knew I was wrong long before this, but in theory, I was risking from 75 up to 30, right? So that's 30 plus 25, 55 points to make 35. That's not even a 1-to-1 risk reward, right? That's horrible, right? But instead, let's say I wanted to long this area, right? Trend line. Okay, so now let's use this pivot low. Let's say you wanted to long this area, right? So, and you don't even get the best entry. Let's say you enter at like 77 or something. Under the low, right? So we'll extend that out. You're risking about 12 points to make, even if you just get it to the most recent pivot high, right? Even just the most pivot high, you're risking 12, 77 to 4,900. That's 23 points. That's 2-to-1. You know what I mean? So even that alone is so much better of a risk reward play. Sometimes I take plays based on risk reward alone, right? Like sometimes I might inverse my own theory simply because the risk reward is better. The entry is smarter. So, yes, Hambo, the entry matters a lot. And if we go back to the old example, right? So let's say you missed the bounce, you missed the absolute bottom, and you think, okay, it's bounced, right? I'm holding the trend. Let's say you enter right here, right? Your stop loss under the most recent pivot low that would break your trend, right? At that point, your risk is, let's say from 12 down to 98, that's 14 to the same top of the range, right? Just this little difference in entry, okay, your risk to reward goes from 27 to 6, which is like a 5-to-1 risk to reward, all of a sudden, just from not catching the bottom, your risk to reward changes from 14 to shoot, what is that? Oh, bad math. 18 to 14. So basically, your risk to reward goes from 5 to 1. All of a sudden, it's like 1.5 to 1. Does that make sense, man?
Yeah.
Captain, is that you, my man?
Sorry, but totally, I'm driving.
You're totally good, man. You're totally good. Just letting you know. But this is the best example here, right? So if you're using this support trend and a break of the previous low is the technical stop that you're choosing to use, right? These are the benchmarks that we're using. If you catch the trend, your risk to reward is about 5 to 1, right? If you're targeting 30 and your stop loss is 00, right? Your risk reward here, you're looking to make 27 points risking against 3. Here, you're looking to make 14 points and you're risking 12, or 18 points and you're risking 12. That's a 1.5 to 1 compared to 5 to 1. So, yes, entries matter. Okay.
Yeah.
Entries make all the difference. So, sorry, do you have a question, man?
Yeah. Okay. Wait, so do you also use candlestick patterns like for example like right here like when you first pulled this up I was like, oh, this kind of looks like an ascending triangle, right? Because the highs are kind of like staying leveled and the lows are getting higher up. Do you see that the same way or no?
Okay.
Like what do you
This is another pitfall that I would argue a lot of newer traders fall into. I focus on price action. And yes, when you're looking at price action, there will be a lot of the textbook patterns that people talk about. But what's really important is not the shape of the structure, but what the structure is telling you about decision making. Okay? So what you see here, so a value area was established here in a bull flag, as some people might call it, right?
right, yeah, absolutely.
We push higher, even though we rejected, you're still defending above the previous balance. Value has been shifted higher. Okay. And when value continuously shifts higher, it means that buyers are still active and buyers are in control. So this whole time, buyers are stepping up higher and higher than before, compressing shorts to play against this 49.30 level. Okay. And eventually, what's going to happen? Eventually, when we push through this 49.30 level, everybody who's short is going to have to liquidate their positions. And I'm sure if you played GameStop, you know exactly what term I'm going to use here. Short squeezes happen on a regular basis. It is not always some GameStop type event. They happen on small scales too, and this is one of them. When we push through 493 here, or the 30 level, everyone who was short had to close their positions and liquidate. And you may know this, but liquidating a short position is essentially the same thing as buying stock, because when you liquidate your short position, you're having to buy the position back. You have to buy the equity back. Okay? So that's what's happening here, right? When shorts have to liquidate, not only are buyers winning and they're holding their position, but the shorts are having to cover and add their positions back. So when you see something like this, where you're seeing compression and buyers are clearly in control, it's going to go one of two ways. If you break this trend, longs are going to have to cover, and they're essentially selling their stock, right? Which will give us a fast, clean breakdown. If we get something like this, it's the exact opposite. Shorts are having to cover their position, and we're getting a fast liquidate, or a fast, we're getting a fast push higher. So that's all that's happening. Is this, it may look like an ascending triangle, and it is, but it's about the decision making that's happening real time, right? That structure tells you about the fight that's taking place between buyers and sellers. The structure, the pattern doesn't really tell you anything. If you just look at this and you think ascending triangle, you don't really know what's happening internally, right?
Right. That
But
makes sense. Yeah.
but but yes, what's happening here is what I just explained, right? It's a fight between buyers and sellers in which sellers are losing, and eventually, when they have to cover their positions, that forces an increase in price.
That makes sense. I think it's like like background of like why it happens, right? Like you see the same triangle, but it's like there's the whole investor behind like the buyer and seller situation. So
And y- when we're talking about a short squeeze, guess what happened today? Do you know how many people probably chased shorts last night? We sold off really hard yesterday, and off of good reason, honestly. The Fed announced, hey, listen, don't look forward to rate cuts. They're not coming anytime soon. The market reacted very poorly to that. And in the middle of a major pivot from all-time highs, breaking below the previous balance, there was a good technical reason to be short here. Like
right,
it made sense to buy shorts. So
right,
it's only logical coming into the day that thinking, yeah, probably there's a good skew that majority of people are short right now. And so after hours, when Meta reports and it drags the market higher, what are all those people who are short doing?
right,
Boom, right?
right.
So, I don't think if we didn't sell off so hard yesterday, we'd probably still be at all-time highs right now, but the move probably would have only been like, let's say we didn't get that sell off from FOMC, right? The move probably would have only been this compared to this. You get what I'm saying?
Yeah,
So
that makes sense. Yeah.
yeah, you have to think about the previous day. Where and how are people probably positioned, you know?
Yeah.
But anyways, I think we covered risk reward pretty well. If you guys have any questions, let me know. I'm about to start clearing up this chart a little bit. Everyone good?
Sure, yeah, thank
Yeah, you guys are good. We are running a little bit low on time. Do you guys have any last questions?
Yeah, I had
Yeah, for sure, man.
did Roku's after outflows and kind of where it puts it in the position of rest of Roku. I know it's a downward channel
Sure.
here, and I've been watching it for a little bit, and then it made a kind of a move after hours to kind of jump back up to kind of. And I was wondering if I don't know because I was thinking just maybe watching it tomorrow if there's any good volume or momentum, and maybe I'll pick something up to Friday just for tomorrow, but we'll see.
Okay, so you're currently back up around 90, and you've already established a balance here. So I'm gonna mark off this spot right here at 88. 88's been respected plenty, and you guys can fairly see, right? Where's our value area, right? Where have most rejections happened? Right around 91. That's where your volume taper is. Um,
Right.
that it lines up perfectly. This chart's really clean, but the one thing that stands out to me is for one, oh, that's not a good view. Here we go. So the thing that kind of disturbs me just a little bit is you've got earnings coming up. And yes, you are in the middle of a downtrend. The spot to risk longs is 88, right? Your good risk to reward is longing 88. Your good risk to reward is shorting 91. And until one of those breaks, don't expect much. In fact, with earnings coming up, I probably wouldn't expect much. I would probably imagine that they probably dance between maybe 93 and 88 for the next week and a half until earnings. That's typically what you'll see in these names. If you're planning to swing through earnings, this is probably when you want to be entering. A week and ahead, or a week, 2 weeks ahead of time is probably when you want to start positioning for an earnings play before a lot of that IV starts to pick up, right?
Right.
But other than that, in terms of just purely technicals, I wouldn't have very high expectations, simply because earnings is still right around the corner. I don't think you're going to see much decisive action leading into that earnings. And especially considering Roku isn't a name that is cutting edge technology or anything chip related. There's no reason for there to be any widespread anticipation or hype for this earnings. So I would even go out to say I wouldn't even really expect a run up, you know? But again, I've been wrong, and I guarantee you I will be wrong again. But based off of what I've seen historically, I don't think this is a name where you should be looking to play for any, you shouldn't be expecting any sizable move. And if you are, it's because you're looking to swing through earnings. Yeah. But I mean,
When I think it's time just for shits and giggles. Mara. Yeah, I don't know if it can go anywhere tomorrow, but
ooh,
I was kind of.
I'll be honest, this chart looks good. I do like what I see here. My only thing is, if you're looking to trade Mara, you need to chart Bitcoin.
Right.
All right, so let's do this real quick. Here's what we're gonna do. We're gonna pull up Mara over here, right? And Mara it's a miner company, am I right? Yeah. Mara's a Bitcoin miner. So if Bitcoin does well, Mara does well. And you can line these. Oh shoot, I gotta fix this. Um, futures show contract changes. Boom. So you can pretty much see, right? These charts line up really well. Let me remove that. So what was the high we made? Two highs we made were December 27th and January 11th. Oh, lines up pretty well. January 11th, right? What was the low we made? January 23rd. What was the low we made? Uh, Pretty much same time, right? When Bitcoin was balancing at lows, Mara was balancing at lows. We've since reversed and bounced. Mara's reversed and bounced. So if you are looking to trade Mara, you want to focus on Bitcoin. Other than that, I mean, dude, I don't look at Bitcoin on a daily basis. I've got my fair share of it, but it's a passive hold for me. We would have to dive a lot more in depth here if we wanted to figure out something.
Right.
But
That's it.
the chart, I mean, hey, if we weren't dependent on Bitcoin here, I do like the chart. The chart based for a week and it's working on a reversal and it's flagging out here, right? Buyers are trying to build value higher. I do like it. The structure looks solid. But again, it's not really going to matter just because it's going to move so correlated to Bitcoin.
Yeah. Okay, makes sense. And I guess just for a general thought, I don't know if you know too much about it. Is is the Bitcoin price based off anything that happens in the real world, or is it purely like arbitrary Bitcoin movement?
No, it definitely matters. I mean, of course, the structure when there is no news or anything like that, it is going to rely somewhat on technicals. But let's say a handful of major companies start announcing, "Hey, we're going to start accepting Bitcoin payments." That is a very positive catalyst for Bitcoin. If I heard just recently that the SEC has approved a number of spot ETFs for Bitcoin. That was obviously a very positive catalyst and for widespread acceptance, right? That was something that drove a spike in the price, right? Um, those are the events that are going to affect Bitcoin. Like it doesn't have realistically, it's not a company. It doesn't produce any revenue or pay a dividend. It has an intrinsic value of zero. Realistically,
Right.
what it's worth is what the next person is willing to pay for it, which is unfortunate. But those are the type of real world catalysts that are going to affect price. Is how much can this thing be accepted, right? What is going to make people be willing to trade for higher prices? It's going to have to be real world acceptance, whether it's companies accepting payments in Bitcoin. Um, what is the strength of the US dollar, right? Typically, you'll see Bitcoin act as like gold proxy in some senses, just a much more volatile one. So, for example, if inflation continues to persist and the value of the dollar continues to decline, that's definitely an argument for Bitcoin strength, right? So those are the type of catalysts that you're going to want to look out for on Bitcoin. Again, I'm not the guy to really get into it super deep. I'll be honest with you, I'm still, it's not my bread and butter. I've been trading options for 6 years. I just bought Bitcoin as kind of a passive long-term investment. It's got a very small allocation in my portfolio. Um, I would say there are definitely better people to talk to about it. I'm personally still trying to figure out how the fuck the blockchain works. But uh yeah, but those are the type of catalysts that will drive sentiment in this space and sector. I mean, the like I said, the structure on Mara looks great, but I don't think there's any catalyst coming up that's going to move Bitcoin higher. So a move on Mara isn't really confident. Just the fact that we are in the middle of a pretty steep decline, but they spent a good week basing before working on a reversal, and since we've begun a reversal effort, we have not seen a big rejection. Price has been holding stagnant, and buyers are showing price acceptance at these elevated prices from the reversal. So on any other given chart on a company, I would be willing to say that, if we continue to sustain this, 17.5 area, that we should be able to see a continuation soon here. And also, I'm willing to bet if we cut it off right here, right? If we look at it daily on maybe just the last 3 months, I'm willing to guarantee right here, let's say from about 24 down to 19-ish, that there's a very decent sized volume gap here that if we do get moving, price can move through this range rather quickly. So check this out. I'm going to throw volume on it and watch this magic. Boom. Right? All this empty liquidity in here, right? So if we do start to work through this recent resistance zone, price would be able to. I'm not saying it's going to go straight through here. That's not the case. But when in this area, price will be able to move easier, right? You will see a more abundance of big moves as we've seen, right? Look at the action that's taken place in this range, right? But if we can move into this area, right, price can move a lot easier. So you may get like one day that shoots way up into 21 or something and then dances for a little bit and then gets another big push into 24 or something. So that's what I mean by the structure looks decent.
Okay. I see.
But hell yeah. But anyways, we are running out of time. I do have some basketball bets that I need to attend to. Um, I appreciate you guys for showing up. It's very motivating for us to continue doing these sessions. And Captain, you know it as always. I know you showed up late, but these sessions are recorded and they will be posted on our YouTube soon. Hambo and Vince Vin, that's what I'm gonna call you for now. Um, Wax.
Which is why,
Uh,
like, Discord name is like your own.
that is my Discord name. Um, but these sessions are recorded, and for you two, if you head up to our socials page, you can find a link to our YouTube where if you guys want to learn more, um, we record every session and they're member led, so members ask questions and we answer them. There's a lot of good content. We cover a lot of stuff every single session, and if you guys want, they're all titled with kind of what we focused on for that session. I encourage you guys to go check those out and refer back to me if you guys have any further questions. And again, I'll be hosting another session next week. Um, but I hope you guys got something out of this, and I hope to see more of you guys around the group. Feel free to engage in the chat. Everyone in here is super active and very open to helping. But other than that, I hope you guys enjoy your time in the group, and let's round this week off on a high note, okay?
Sure. Sure.
Niners, bro. I'm in Sacramento. Let's go. Yeah, man. I mean, dude, anyone against Mahomes, I'm rooting for them. You know.
Yeah, that
But anyways, you guys have a great night. You guys can always shoot me a DM if you have any questions after hours. But I need to attend to these basketball bets. It's urgent. All right.
back.
You guys have a good night. I'll see you guys tomorrow.
Okay.
Later, guys.